War, Strait of Hormuz closure impacting Canadians in ways we may not have expected. The Middle East war is impacting something most Canadians may not have expected: the cost of some mortgages. Last month, 3- and 5-year fixed mortgages increased by 0.5% in just 3 weeks, said Marshall Tully, a Toronto-based mortgage broker. Unfortunately, it's possible that trend could continue, Tully said. According to the Canada Mortgage and Housing Corporation, CMHC, 1.4 million mortgages will be renewed by the end of the year, representing about 23% of all mortgages. Many of those would have received much lower rates from 2021. Many people are coming into their renewals totally blind and thinking that rates just keep coming down or holding, he said. Tully said fixed-rate mortgages have risen particularly quickly because they are backed by bond yields, which can fluctuate in response to world events like wars. And U.S. President Donald Trump's primetime address on Wednesday offered little new insight on how long he expects the conflict to last. Some lenders, who were holding back raising rates as it looked like there may be ceasefire talks, moved forward with raising rates after his speech. The uncertainty premium. The Bank of Canada's key interest rate, currently at 2.25%, was set in October 2025 and held in all subsequent announcements since then. Before the war began, further cuts had been predicted for this year. Tal says that the forecast has now changed. Along with the war and Iran's subsequent closure of the Strait of Hormuz, continued U.S. tariffs are also impacting fixed-rate mortgages in Canada, he said. I believe the 5-year fixed rate is already too high for this slow economy. However, banks will raise rates to avoid being caught short in future lending, especially long-term. Just a few weeks ago, the average rate for a 5-year fixed mortgage was closer to 4%, Tully said. As of April 2nd, it's at 4.95%, with the 3-year rate close behind at 4.59%. That's compared to the average variable rate, which is at 4.2%.